Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look at the dollar versus yen as we head into the weekend. I'm going to take a longer-term view and a shorter-term view to show where we're at and what are the risk levels, what are the targets, what are the biases. So let's get started. Well, the bias is to the upside. In fact, the last 5 trading days have seen gains this week. So Monday, Tuesday, Wednesday, Thursday, Friday, all higher. And we are approaching the high price that we saw at the end of October, the beginning of November. That level comes in at 151.709. That level was just short of the 2022 high, which came in at 151.93, just short 22 pips. But we're talking about the longer-term daily chart here. So that's pretty close. And if we get above the 151.93 level, we would be trading at a multi-decade high for the dollar versus yen. So it's pretty significant up here at the highs. And I'm not surprised that we did find sellers early against the multi-decade high. And the price did, in fact, move lower at the beginning of the month, 3 straight days, sharply to the downside before rotating to the upside. Now, that move to the downside, the price did get below the 150.15.9 level. That was the high price going back to this day right here, which is the spike high when the first time above the 150 level. Recall that. Then we moved down about 180 pips, or was it 280? Anyway, big move to the downside, and then rebounded back to the upside. We did have another little spike lower here that took the price down to 148.68, and trading at the end of October when the price came down toward that level, found support buyers moved sharply to the upside on the this day right here, and rotated all the way up to that 151.79 level. So things are looking more, for the bias is more to the upside here in the dollar versus yen, most obviously. But we do need to get above the 151.93 level to increase the bullish bias, make our multi-decade highs. And then up above that level, we start to look toward the trend line right here, which cuts across currently around a 153.19, 20-ish type level. And it's going higher. So it's a long way off, from a pip standpoint, 51.93 up to 153.19.20 is what, 130 pips or so to the upside. So it's a pretty big jump all the way up to there. And but as long as the price is able to stay above the 93 level on a break, it would be more bullish for the dollar versus yen. Now, of course, there is that risk that the Bank of Japan doesn't like these levels up here. Remember, they didn't like it above the 150 level. The market's really concerned about that level. So there's always, we could see a sharp move to the downside and any sort of hint that the Bank of Japan may change their policy or look to intervene in the market. That's always a risk. So we have to be aware of that. If we start to move back below the 150.15 level, 150 level, I would be start getting more concerned. And then if a break below the 148.68 level would also be a concern to the downside off of the daily chart. Let's take a look at the hourly chart. You can see that this week's trading, it's been up. I think I said up 5 times, so it's 5 days to the upside here for this currency pair after bottoming last Friday down here at the 149.18 level. Here's the 150 level right here, and you can see we traded above and below it there. Here's the 150.15 level, which also happens to correspond with the 38.2% retracement, and we moved up to that level. And also, by the way, the 200-hour moving average was near that, and 100 was a little bit more above that. So we moved above that level. What was key in trading this week was the ability to hold the 100-hour moving average right here and the 200-hour moving average, and that's kind of got the things going to the upside. The other key level that the market held this week was this area right through here, which corresponded with the 61.8% retracement of the move down from this high to this low right here, and also corresponded with this high price here, this high price right here. We broke above it and moved to the high, and then we came down to it and through it, and then found a momentum to the downside here. We returned back to it in trading here this week, moved above it, moved a little bit below it here before basing. And what was really key is this test right here on 2 separate bars where the price came down to that level and found support buyers. That gave the buyers the A-OK, and even though the price came back down toward that level, we found early buyers here and pushed the price over the last 2 days to the upside. So things are looking positive on the hourly chart as well. it would probably take a move below, maybe this level right here at 151.23 in the short term, and then below the 150. Not necessarily that level, but the 100-hour moving average at 150.82 to get things working more to the downside. Absent that, get above the end of October, early November high at 151.71 type area, opens the door for further upside, and of course, toward the 93 level, the 2022 high, multi-decade high. So there you have it, a detailed look at the dollar versus yen as we head into the weekend, as we head into the new trading week. The buyers are in control. And we will see if that continues next week. Where does the Bank of Japan come in and do something to us? We'll see. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.